Hi, my name is Nick Burgess, and I want to tell you about my new book, which is called Low Latency Interest Rate Markets Theory, Pricing, and Practice. Now, I've been working as a quant analyst for many years in many of the world's largest investment banks and hedge funds, and I've worked in so many different geographies, kind of in the electronic rates markets, and I've always needed to price interest rate products that, in a very fast way and be able to risk manage in a very fast way because the markets are electronic. And also for systematic sort of algo type trading, it needs to be quick, it needs to be accurate. And a lot of banks weren't really able to achieve that really well. And over the years, I've been collecting my notes on how to achieve this. And this is what my book's about. I'd like you to sort of give it some thought and take a look at it and see what you think. I'll go through the chapters and please consider buying my book. It's a great book for practitioners. And so here it goes. Here's what's the I'm going to go through the contents and I'd like you to think whether it's very useful to you or not. So in the book's split into two parts. The first part's theory, the products and the models, and the second part is about the pricing and the practice. So in chapter one, I talk about low latency interest rate markets. I give an overview of the transition from LIBOR to SOFR interest rates, and just how low latency works in general and why the need for it. Then chapter two, I talk about very specific interest rate markets. I talk about how products are quoted, how they trade, how we execute them, the parameters we need to do, the conventions, how it all works from a market perspective. Chapter three, I talk about interest rate products and pricing, pretty much everything that's used in the interest rate markets. I talk about interest rate swaps, OIS or overnight index swaps, risk-free swaps, which are the new SOFR ones, the LIBOR basis swaps, cross-currency swaps, credit default swaps, and asset swaps for FRAs, futures, and including the convexity adjustments. Then chapter four, I talk about the yield curve models used for forecasting and discount cash flows, which are kind of the essential ingredients for pricing interest rate products. And I talk about the yield curve models, how they're optimized, how they're calibrated, the different types of calibration. And I also talk about advanced features such as curve Jacobians. How do we calculate ultra fast yield curves? How do we compute ultra fast real time risk? And I'm talking about portfolio level risk, portfolio bucketed sort of portfolio risk, which tells you how to hedge and to do that, how to do that in real time. I talk about the turn of year effects, spikes, and modeling jumps. All of that in chapter four. It's a very good. It's a pretty amazing read, that chapter. Chapter five, we talk about interest rate risk, analytical, numerical, and then more advanced features like curve Jacobians, algorithmic differentiation. How do we get our risks super fast without it being super complicated, without it being super expensive, without the need for sort of a very heavy infrastructure investment? Chapter six, we talk about credit models and how do we compute survival probabilities for credit products. And then chapter two is the pricing and the practice. We start in chapter seven with interest rate swap pricing and risks. We go through sort of examples of how to do that pricing and risk. And then in chapter 8, I give you some case studies for interest rate swaps, and we price those through together. And then in chapter 9, we talk about asset swap structuring, which is the funded purchase of a bond. Then we talk about in chapter 10 the asset swap pricing and examples. So again, the case studies, but for this time for asset swaps. And then very interestingly, we conclude in chapter 11 with the multiples and rule of thumb approaches. What that means is we should be able to, with the techniques in this book, we should be able to look at a trade, look at a portfolio, look at our risk profiles, and we should be able to sort of calculate, well, what's the price of that instrument in our head using these rule of thumbs, using multiples of a base case. And we can use that to look at a portfolio, and we should be able to sort of inspect the output of our models, and we should be able to sort of in our heads sort of sanity check and verify are the numbers correct. And we can very quickly look at trades and know what the PV is, know what the risk is, know what the risk profile is, so that you can sort of sanity check your models. And that's a very, very exciting, interesting chapter to finish with in chapter 11. So Like I said, Low Latency Interest Rate Markets is a book written by a practitioner. I've implemented everything in this book many times. It works, it's fast, it's accurate, and I'd like you to give it some thought whether you'd like to buy it as your next book. Thank you. Bye.